In today's world, where inflation seems to be a constant companion, businesses are facing challenges that can feel overwhelming. If you're part of a company, whether you're in finance, production, or even management, you've probably felt the pinch of rising costs. You know the drill. One day you have a standard cost for materials, labor, and overhead, and the next day, those numbers feel like they've been thrown into a blender. So, how do we navigate these turbulent waters? Let's dive deep into understanding how to manage standard costs in high inflation economies. First, let's unpack what standard costs are. Think of them as your company's budgeted estimate for producing goods or services. They're like a roadmap, guiding you on how much you expect to spend on materials, labor, and overhead. However, when inflation kicks in, it's like someone took that map and scribbled all over it. Suddenly, the prices you thought were set in stone are shifting beneath your feet, and that can lead to significant variances between what you expected to spend and what you're actually spending. Let's start with material prices. Picture this. You're a manufacturer, and you've set a standard cost for the raw materials you need. But then, boom, inflation hits, and the prices of those materials skyrocket. You're left with a situation where the actual cost of producing your product is far higher than what you had budgeted. This is where you start seeing those dreaded material price variances. If you don't address these issues quickly, they can eat away at your profit margins before you even realize what's happening. And it's not just materials. Labor rates are also affected by inflation. Imagine your employees are coming to you, asking for raises because their cost of living has increased. It's a tough spot for any manager. You want to keep your employees happy and maintain their purchasing power, but at the same time, you have to keep an eye on your company's bottom line. If you don't adjust your standard labor rates accordingly, you're setting yourself up for labor rate variances, where your actual labor costs surpass your expectations. It's a balancing act that can feel like walking a tightrope. Then there's the overhead cost. Think about all the expenses that go into running your business: utilities, rent, maintenance. These costs don't just sit still, they rise with inflation too. If you haven't adjusted your overhead standards, you might find yourself in a situation where your actual overhead costs exceed what you had budgeted. This can lead to overhead spending variances, which can distort your understanding of the true cost of production. So, what can we do about it? How do we manage these standard costs effectively in a high inflation environment? The answer lies in adopting proactive strategies. First and foremost, it's essential to update your standard costs frequently. Instead of waiting for that annual review, consider doing it quarterly or even monthly. The more often you adjust your standards, the more accurately you can reflect the current market conditions. This means involving key stakeholders from various departments: purchasing, production, finance, because everyone has a role to play in this process. Collaboration is crucial here. Another approach is to implement inflation-indexed adjustments. This might sound technical, but it's straightforward. Link your standard costs to specific inflation indices, like the Consumer Price Index or the Producer Price Index. This way, as inflation rises, your cost standards will automatically adjust, keeping you aligned with the current economic landscape. It's like having a safety net that helps you stay on track without constantly having to recalibrate your numbers manually. Now, let's talk about scenario analysis and sensitivity testing. This is where things get really interesting. By creating different scenarios based on varying assumptions about inflation rates and costs, you can model how these changes might impact your financial performance. For example, what happens if raw material prices increase by 10%? You can run that scenario and see how it affects your profitability. It's all about being prepared and having contingency plans in place. And don't forget about your suppliers. In high inflation environments, maintaining strong relationships with your suppliers is critical. Work closely with them to negotiate better pricing arrangements and ensure a stable supply of materials. Consider long-term contracts that include provisions for price adjustments based on inflation indices. This can help mitigate the risk of sudden price increases and provide you with a more predictable cost structure. Open communication is key here. Share your production plans and forecasted demand with your suppliers so they can better meet your needs. Finally, let's touch on continuous improvement and cost reduction initiatives. It's not enough to just react to rising costs. You need to proactively seek ways to improve efficiency and reduce waste. Techniques like value stream mapping can help you identify areas of inefficiency in your production process. By eliminating non-value-added activities, you can streamline operations and reduce costs. Lean manufacturing principles can also play a significant role here, focusing on minimizing waste and improving flow through your production process. In conclusion, managing standard costs in high-inflation economies is no small feat. It requires a keen understanding of how inflation affects your material prices, labor rates, and overhead costs. By adopting proactive strategies, frequent cost updates, inflation-indexed adjustments, scenario analysis, strong supplier relationships, and a commitment to continuous improvement, you can navigate these turbulent waters more effectively. It's all about staying informed, being prepared, and making informed decisions that will help preserve profitability in these challenging economic conditions. So, whether you're a finance guru, a production manager, or just someone trying to make sense of the numbers, remember that you have the tools and strategies to tackle the challenges posed by inflation head-on. With the right approach, you can keep your business thriving, even in the face of rising prices. Let's embrace these strategies and position ourselves for long-term success in this ever-evolving global marketplace.